Hey guys, Omar here, broker and CEO of Alden Mortgage and Ome Realty. So the biggest question I have is, whenever you're a mortgage, as a mortgage broker and as the owner of these two companies, the biggest thing that I always get is like, hey, how much does it actually cost for me to go ahead and get this mortgage? So what I'm going to do is I am actually going to price out 3 different price points. We're going to do a midpoint, a high point, and then a very, very small point. And I think I'm kind of just making this up right now as I go. I think the high point, what we should do is going to be at $1 million. Midpoint will be at 500,000, and then the low point will probably be at 300,000. So this gives you a rough guesstimate of exactly how much is the down payment, how much is homeowners insurance, taxes, insurance, all of that other stuff. How much is it relatively cost for each and every single price point, and what will be my principal and interest payment total. Now, because this is a conventional loan, you can actually on a conventional loan go like pretty low. You could go to 96 or 96%, which is a 3% down program, which is good. It's not bad, but I will go ahead. I did another video on that already, but what we're going to do on this is going to be a 20% down. So I think I said what? I said 500,000, 1 million, and 300,000. 3, 5, 1. Okay, so that's what we're going to go ahead and do. So I'm going to do like one of those little screen recording things so you can kind of see what's going on. And we'll go ahead and go from there and explain it. And if you guys want to know how much your principal interest will be, link in the description below. You can go straight to my website. On my website, you go to calculators. You can kind of figure out a lot of this stuff on your own, which I think I'll actually do that too, so you can kind of get an idea. Or you know what? I was actually going to do it directly in a price engine so you could do credit scores and all that other stuff, but I'm going to do both. We're going to start off with the website, then we're going to go ahead and jump onto the actual origination program so you guys could see what we are dealing with. So let's get on with it and let's get on there. All right, so what we're going to go ahead and do is I am going to go ahead and go right over here. We are recording. All right, so you can see the address bar. Now, directly to my website is going to be aldenmortgage.org. You can go ahead and go straight to my website. This is my little website. It is what it is. It does what it's got to do. We have amazing customer experience, of course, because you got me or one of my loan originators. But what we're going to do is you could either come down here, and you could actually just apply directly, refinance, purchase. You could do that directly with our website, which will actually tell you, it'll do a short form. But what we're going to do is we're going to go to calculators for right now to see exactly what we have. So a mortgage calculator, we have refinance calculators, extra payment calculators, which this is, I'll do another video on that, but extra payment, one extra payment, and we'll give you some tips and tricks on that too, because extra payments will save you in some cases could be hundreds of thousands of dollars. It's pretty nuts, which we'll show you. But, I got pretty cool calculators in here, how much house I could afford, your principal calendar, all these other little things that we got going on here that is, it's pretty dope. I do what I do, how I do. My mortgage calculators are pretty awesome. Like you click on one of them, and we have a nice little graph. It gives you a little breakdown. It's a little interactive, all that other good stuff. Gives you your taxes, insurance, principal and interest, hazard insurance, all that other good stuff. So this is on a conventional. This will let you know what your interest rate. We're not going to do a 3%. We're going to do a 20% down payment, which will be on that will be 50. Interest rate is at 4%, which we're not really at 4% on today's rates, which is unfortunate, but you could go ahead and adjust accordingly. If you want to know what the updated rates are, just go ahead and like, subscribe, comment. I try to give at least 3 or 4 mortgage rate updates every single week on a conventional FHA, jumbo, 5-1 adjustable rate mortgage, and a 15-year fixed. So if you want to know, you could go ahead and go from there, but let's get out of here. And then what we're going to do is, this is actually the origination program that we have. This is going to be a drag and drop file. And this is a drag and drop file really doesn't mean much to most of you. But for us in the world of mortgaging, a drag and drop is just an electronic file of your what's called your 1003. A 1003 is, if you ever hear somebody says, oh, you need to fill out your mortgage application, your 1003. Your 1003 is just your basic mortgage application. We do 3.2 files, but more commonly now, because we have updated the system, it's actually going to be on a 3.4 file, which means absolutely shit to you. But I had to just, I don't know why I just did that. Maybe it was a flex. That's what it was. That was a total flex. But company name, that's going to be me. I'm going to go ahead and keep myself as my own company. It is. I'm just going to do that. We're going to go ahead and do a test. Test. There we go. Test on a conventional loan. Nothing out of the ordinary with that. So the first price point we got, as promised, we are going to do $1 million. Now, $1 million on these are all going to be at 80% loan to value. And as you know, 80%, 20% down of $1 million will be $200,000. $200,000. This will give you an idea. Now, the credit score, okay? Now, I am going to assume that you have good credit score. 800 is pretty amazing. I'm going to go ahead and drop this down to a 750. Actually, oopsie daisy. I'm going to drop this down to a 780. 780 is good. So monthly income on $1 million, we are going to go ahead and relatively say, because it's $800,000 loan, we're going to do $200,000. No, what am I doing? $200,000 monthly income. That would be awesome. If you made $200,000, you're doing all right in life. I'm not going to lie. You're doing pretty goddamn good. You're doing amazing. But we're going to go ahead and do let's do $17,000 a month. That should pretty much cover our costs. We're just going to do, I don't know, $1,500 a month on that. So on $1 million, depending on the county that you're in and everything like that, they go by what's an assessed value. This could typically change. Okay, this will not always stay the same. Especially now, here we're in 2022, the home property values are getting reassessed because we have this crazy, like a crazy amount of home price increases that are just, have lost their damn mind. But for the most part, annual taxes, let's just go ahead and say it's about $15,000. Give or take, that's how much it goes. And if you didn't know, you could always just go back over here. You could say, okay, property price is going to be at $1 million. And then that'll give you your total payment. Principal and interest, taxes, and HOA will be about $1,000. Sorry, we had a little minor glitch, but $1 million, $200,000 down payment. Now, this is all rough ballpark of everything, but let's go ahead and get into this, which we're going to do homeowner insurance. We're going to go ahead and leave that blank. We really don't. I don't know. We'll just do $1,200. $1,200 is roughly where it's at. Oh, God, why is it doing that? Oh, Jesus Christ. Major malfunction. Hold your horses. All right, excuse the little hiccup we had here. I'm going to go ahead and just dump this really fast. We're going to do loan amount, $800,000, $1 million, 80% loan to value. We're going to go ahead and stick to California. We're going to go to the last zip code I did. That'll be LA County. We're going to go monthly income. We're going to do $17,000. Now, this is just redundant. This really doesn't mean anything because you still have to fall under the ratios that that is required for an $800,000 loan. Freddie Mac and Fannie Mae, it's at about 47% total debt to income ratio on your back end, which just means that it's like if you took all your bills and compiled it into one with your principal and interest, it would have to be not your net. So your net is going to be the amount of money that you actually take home. It will be your total gross income. So it's going to be before taxes and before all that other good pajazz. That's what it's going to be. So we're going to do the monthly debt at, I don't know, $1,000. Annual taxes, we're just going to kind of ballpark it at $15,000. Homeowners insurance. Now, this we'll end up getting this from title. And taxes can change, just so you know. That's why I'm kind of really rough ballparking it, depending on the county you're in, and every single county has different tax rates. But this could actually, if you went ahead and bought $1 million home, but it was assessed at like $400,000, which has happened a lot, especially in the past 2 years, this all craziness that we had. This could go ahead and reassess, and then you'll be paying taxes on, you could either here or here. From the $400,000 you were totally getting assessed until this, which could jump your total liability on your taxes by like $500-600 a month. You never know. It could depends on your county and depends on the tax bracket that you're in and what they have it assessed for currently versus what they can assess it for. So that's why we're kind of ballparking the taxes. Homeowners insurance, we're gonna go ahead and say that's $1,200. 30-day lock period. Now, what's a lock period? A lock period is just going to be how long this rate that we're about to pick is going to be good for. Now, this number right here, when you have a 30-day lock, this does not mean anything to you, but for us, this is the world, because that means that we have to fund. That means everything has to be done by, it depends if this falls on a Friday. We have to have everything done by Monday. Monday, which is 4 days from before this, will have to be done on the 9th. That means that underwriting is done, appraisal is done, title, escrow, all verifications, everything has to be done before that, because I have to have money in the account sold and ready to go ahead and get into that escrow to set payment off to whoever is getting the payment, and wet funded. So we have dry funding and wet funding, but this will have to be a wet funding directly into the accounts that we have that day right there. That's the most important thing. Lender paid compensation. We're going to go, I don't want you to see how much money I make with this specific wholesaler, because that's weird. I'm not going to do that. But this is actually a really good talking point. I've said it in a bunch of my other videos. But if we ever want to compete, now lender paid versus borrower paid, okay, lender paid versus borrower paid. If I am lender paid, this is how much I am going to require from this lender to go ahead and pay me to sell this loan here. I already have a contract. Every single wholesaler that we deal with, we have a contract between one another. And then they give you the choice like, hey, how much do you want to sell these loans for? And I say, okay, I'm going to sell it for this. Now I have the ability to go ahead and swap this to what's called a borrower paid. This is something very important to know. It's hugely important to know, because lender paid, when you get something on your loan estimate, you will not see how much I get paid. Does that mean that you're going to be in a better position whether you see it or you don't? Well, that's going to be something we're actually going to go ahead and take a look at in a little bit. The rest of this stuff, we're not even going to worry about it, because we're going to go ahead and price out this guy, and you could kind of see exactly how much we are, and then we'll go ahead and play around with the dollar amounts over there. So we're going to come down over here. Now we are currently sitting at 5/12, 2022, somewhere around there. We're going to go ahead and skip all the, these are adjustable rate mortgages, 5/6s, 7/6s. There's another 5/6. These are like whatever, but we don't want that. We want to go ahead and just see the fixed rate terms. So on a fixed rate term, currently, if you want to go ahead and get a 5.250% on $1 million loan with 20% down, your principal interest payment will be at $4,417.63 a month. With your insurance and everything like that, will be at $57.67.63. That's $200,000. That's at 5.2050%, and that's going to be at a cost of $680. That's just what it is. Now we get a little bit of credit on the base price of it, which is pretty good. But the rest of it is pretty much, the cost of wholesaler charges and everything like that. But this is relatively what you're going to be at 5.25. Now, for the sake of argument, let's just go ahead and say, hey, you know what? I want to go ahead and buy down points, which I think I made another video on should I buy down points. But we'll go ahead and double up on this, and we'll do the whole should I buy down points. Now, when you buy down points, that just means like, okay, look, we are currently at 5.25, okay? 5.25 on this high balance 30-year fixed. Here we are at 5.25. 5.25, our cost is going to be $680. At 5.125, it's going to be a cost of $7,592. But let's go a little bit drastic on this. We're going to go from a 525 to, let's say, a 55. This is going to be a cost of $22,104. You're like, damn, that's a lot of money. But is it? So let's say the price on this one, your principal and interest, is going to be at $4,053, and this one is going to be at $4,417. So I'm going to go ahead and go find a little calculator here. Give me a second. And then I'm going to go ahead and pop the calculator. Boom. Okay, so let's go ahead and see where we're at. So the magic number right here is $22,104. So we are going to assume, for the sake of this argument, that you are going to stick to this house for 30 years, and you're going to make your payments, and this is just where you're going to be at and nothing else. You're not going to refinance. You're not going to do anything. So we're at 5.25, which is going to be at 4417.63. Now we're going to go ahead and minus that off of, let's say we're going to pay $22,000 to get this at 4053.48. That is going to be a difference monthly payment of $364.15 a month. Now, is this $22,000 really worth it? Well, if you don't refinance and you don't do anything and you stick into this house for the whole entire remaining of the 360 months, 30 years, let's go ahead and do the math. So $364, I'm not going to worry about the pennies, times that by 360 payments you'll totally make. It'll end up saving you, though the total difference in cost will be $131,040. That's the difference. So in order for you to go ahead and save, that's if you're not refinancing or you're not doing anything, that's how much you'll be saving in the long run. $22,104 will go ahead and buy you at a lower rate or a lower long-term exposure at 131,040, which if you take the cost out of this, that'll be 2111. It'll be like $110,000 over a total of 30 years that you're going to be paying. So is it really worth it? Yeah, if you're going to stick to it, yeah, that's going to be awesome. That's going to be great. That's going to be a huge, huge chunk of change for you to go ahead and save. Now you could keep going lower. Now, to give you another idea of exactly how much we were buying home rates at for before, we weren't even at 3.5. We were at like 2 something in the beginning. And this gives you an idea of what the drastic difference is and why we get in the world of real estate, why it's actually a little bit worrisome, and why buyer power has diminished, and how people are not buying homes as much as they are. Regardless of what you see out there, this is what I do for a living. I do this day in and day out. We were doing 50, 60, 70 applications a month. We were doing very, very well every single month. And I don't have a big team. I have a pretty small team as a whole. But even at 3.5% on $1 million, you are going to have a principal interest payment of $3,592.36. Compare that to where we're at today, which is going to be roughly about this area right here, $447. So this is like, it just lets you know how much of a difference that just a couple of percent in interest rate makes. So if we're at, where are we at? We'll go ahead and go to the 5. That'll be $4,542 minus the 3%, which would be at $3,592. That's almost $1,000 difference, which this pretty much is the difference between whether you're getting approved or you're getting denied. Times that by 360 payments, this is going to be a little bit of a kicker, considering even we're at 2s. That on this loan is a $342,000 difference just on interest alone. That's it. That's just a difference on interest alone that you will be paying. It's outrageous. It's crazy, the difference in payments from one. And to mind you, we were at 2.5. We were here, not even at 3.5. We're at 2.5. I was actually selling the lowest rate I ever sold on a 30-year fixed rate mortgage was 1.875% with a point. I don't even have that option anymore. I can't even get to that 1% unless I go to the 15s. It's just insane. So yeah, we're in a little bit of a little hiccup right now, or If you ever watch that movie, Big Short, we're in a bit of a gully. We're in a bit of a shitstorm, is what we really, really are. But I gave you, now let's go ahead and, because I said I was going to do the million. Now let's go ahead and do the sale price at 500,000, which I think most of it is just going to be redundant at this point, right? 80%, that's going to be $100,000 appraised value. We're going to do it at appraised, appraised value. We're just going to go ahead and do it at $500,000. Get a quote. Now, with all of this, you could honestly just do this all directly through through my website and kind of get a rough idea of where you'll actually be. We're going to skip those. We're going to skip those. We're going to go ahead and go here. So on that one, we're going to be at 5.25. You're going to get a credit of $900 back on that one. So just to buy this at 5.25%, you are going to get a credit of $900, which will end up putting your principal and interest at $2,208. So I think that's pretty much all she wrote. Let me go ahead and stop this guy. So hopefully that helped you out to kind of get an idea. I know I didn't do the $300,000 one, but I feel like this video was just dragging really, really long. You could just go on the website and just do your own. Like, it won't be that difficult. They're all relatively the same. It's all a 20% down program. I mean, I guess going high, the $1 million is kind of like clickbaity. It's kind of like, but I mean, we did what we were supposed to do, right? 300,000, 500,000, 1 million, but we never touched the 300,000. But go ahead and go on the website. You can go ahead and play with the calculator, see whatever it is. And if you had any questions about anything, or there's something that I could have answered that I didn't, let me know in the comments below. Or for up to 50% commission rebate, 0% listing on selling your current home, or any mortgaging assistance. I'm talking about anything. I'm a pretty good broker. Not gonna lie, I'm a pretty good broker. We have 100% down, 100% financing programs. I got financing for her, him, whatever gender, whatever color or race or whatever. These are all jokes. I was just joking. That's just trying to ruffle some feathers. I don't know why I did that. That was so stupid. I apologize. But we have loan products for everybody. So if you need any loan or mortgaging assistance, link in the description below. If you like the content, like, subscribe, comment, all that other good stuff. If you liked it, you hate it, I have a stupid face, I don't know, whatever it is that people say on the internet, let me know in the comments below. Until next video, guys, thank you for watching. Peace.